U.S. consumer sentiment plunges. George Cipolloni of Penn Mutual Asset Management, talk to us about the latest survey, and does it concern you?
Lisa, so that consumer confidence number was really impactful, and we've seen moves across the markets, both stocks and bonds. And so one of the big things is that not only was the current number low, but the expectations number was low, and the inflation expectations number was completely wild. There was a huge partisan split between inflation expectations between Democrats and Republicans, and we know that to be true just anecdotally, but it was amazing to see it in the number today.
Consumer spending accounts for about 75% of U.S. GDP. So, do you see this index as another sign that perhaps we are heading into a recession?
Do you think there is potential for at least a slowdown? Do not know if we'll get all the way to a recession, but what we are listening to is management commentary. And so if we listen to Walmart's CEO and Dollar General's CEO, they both yesterday said that consumers are struggling to pay for necessities. So we obviously do see some type of slowdown, and we have to watch out for the consumer here.
Stocks bounced back today, but gold hit $3,000 an ounce for the first time, which shows that investors are still cautious. What do you think will be the ultimate impact of President Trump's policies on the market?
So the policies nobody knows right now. There's this word that everyone is using. It's uncertainty. CEOs don't know. Investment managers don't know. Nobody really knows except Trump. He obviously has a goal, right? And his goal is to increase tariffs to create a fair playing field for trade. And then he's also trying to cut costs at the same time. We just don't know. Again, the long term, that could be good, but in the short term, it certainly is creating a lot of volatility because of that uncertainty.
When we talk about long term, how long is long term, do you think?
Would think years. So he's trying to fix a generational problem. And I think that's ultimately the difficulty in what he's trying to do. And I think in essence, there's never a wrong time for fiscal prudence. There's never a wrong time to not spend wisely. And I think he's trying to do a few of those things, but also we have been so overweighted in terms of the impact of federal spending and government hiring for jobs that again, the movement here is just going to create some volatility.
Markets have been flipped on their heads in the past couple of weeks. Give us really some context and perspective as to how much things have shifted.
Lisa, let me give you a few stats because the rotations that we were seeing across the market are pretty staggering. They're very, very noteworthy. The first one I'll mention is the rotation from growth into value. We've seen the Mag 7 underperform. We've seen value stocks outperform by roughly 10% over growth stocks. The second really big one relates to the consumer. There's been a huge wealth effect that's just come out of the market. It's been about $5.5 trillion. It's significant as well. And people are worried about consumer spending and discretionary spending. And discretionary stocks, for example, have underperformed consumer staples by about 21% since January. Those are pretty big numbers. And again, great examples of the rotation that is underway.
Spin us forward to next week when the Federal Reserve holds its two-day policy meeting. Interest rates are expected to remain unchanged. But how do you think Fed Chair Powell will play his cards in terms of his public language?
So Powell's in a really tricky spot now because what we're seeing are growth fears across the board, across the corporate America, across the government, obviously, with all the efficient spending and the cutting. So I do not think he is going to cut rates next week. I don't think there's any reason to yet, although he is starting to get some room on the inflation front, which I think is a little bit of relief. He should breathe a little bit of a sigh of relief there, which is good. Again, on the flip side, we're going to have to manage these growth fears. I will say that traders are starting to bet on number one, more rate cuts for this year and quicker rate cuts, and maybe even as soon as June.